In this video, I'm going to show you how to combine 1,000 plus loans in Excel. I'm also going to show you how to protect all your fixed assets with unlimited replacements, both with unlimited periods, anything from 20 to 30 years or as long as you like. Complete with multiple automated amortization tables, how to create a self-adjusting asset register, which is forward-thinking. The product suite consists of two products. The Excel Loan Portfolio tool has its own detailed video. The link is in the description, and I'll also provide a link to the video at the end. The Forward-Thinking Asset and CAPEX Forecaster also has its own video, and the link is in the description as well as the end. Based on over 20 years' experience, modeling capital decisions over time is deceptively difficult. From multiple funding tranches to asset investments and reinvestments. As a result, this is typically undermodeled. This is now a thing of the past. Based on two simple input tables, any user can now do this effortlessly. One combined function takes only two range inputs. The first being your simple to manage loan table, which includes both your date, your amount, your period in months, and your interest rate relative to prime. And the second range being your interest rate schedule with your prime rate history. The last rate being the terminal rate. In this case, everything after November 2030 would be at 9.75%. Thereafter, you need to name the loan and specify the bank. That's based on a drop-down list, which is listed over here. The final argument being true or false. If you place as false, you'll get the following result to the right. You'll get every single loan schedule stacked up in detail, loan by loan, vertically to form a single range representing all the loans. Scrolling down, you'll see this loan amortizes to the end of its life to zero, the commencement of the next loan, right to the end, the very last loan. Replacement schedule function, which computes all acquisitions and projects the future acquisitions till the end date, takes three input ranges. As you can see, the first one being the main input range, which is a simple input table user manages, including the asset type, the date it's acquired, and the cost being the compulsory fields, with an optional field for the quantity of assets being purchased, if omitted was assumed to be one. Based on a end date, which is an overridable field, you can specify till the year 2090 or 80 if you like. It computes a given number of replacements between the acquisition and end date automatically, as well as using a replacement interval equal to the asset's useful life. These are adjustable inputs, which you can adjust over to the left. If you'd like to limit the amount of replacements to a given amount, you input that there. Alternatively, if the replacement interval you'd like to adjust, you put the amount of months beyond or less than the useful life at which you'd like to adjust the replacement interval to. So that enables you to customize your acquisition and your forward looks to your acquisitions. The remaining two ranges consist of setting up your asset classes themselves, a broad category, plant, property, and equipment, and intangible assets, and then the specific asset categories and the useful life which is applicable to each category. This table, of course, is used as the drop-down list to that basic input table. And the final input is the inflation table, which consists of the first few years to writing custom fields, and thereafter a terminal rate, which is overwritable. Alternatively, you just need to copy these formulas down if you'd like particular custom custom percentages for each and every single year. And so you generate a forward-looking replacement history complete, including your current acquisitions and all their future replacements. This becomes the input to the forward-looking asset register. Looking at the depreciation schedules function, you'll see that it takes that schedule into account. And this creates your forward-looking asset register, which shows you the detail of every single asset on the schedule over its entire useful life. The last three columns, you'll see it computes every month's depreciation, accumulating its accumulated depreciation, and the resultant net book value. It does this over the whole useful life of each individual asset, right to the zero value, and right to the very last replacement of the current acquisitions to form a complete forward looking register, including a rundown of remaining useful life from the very first month of acquisition. That all the loan and asset outputs are represented by Splill ranges, Splill or self-adjusting ranges. As you can see in this table here, it spills and adjusts itself to 259 ranges. Thereafter, there is nothing. And you'll also see that this is based on a single formula. As you can see over here, represented in this cell. Go outside the cell, you'll see that that single cell computes the table. And it doesn't need to be represented by 259 different formulas. It's one formula, making these types of solutions foolproof. And this is the case for all four outputs, including the combined loan schedule, as we see here, the stacked loan schedule output, the replacement projection in the fixed assets, as well as the forward-looking asset register, making this a simple-to-use model for a user where all they need to do is maintain two simple input tables and a few support schedules like the prime interest rate schedule, the fixed assets and the useful lives, and perhaps inflation percentages, making this a robust, as I like to sometimes say, idiot-proof type of model. All of the results of your forward-looking fixed asset register and your all of your loan tranches in your combined loan schedules transfer seamlessly to your three-statement model. You will see there is an annual section and a monthly section. If you expand the annual section, you'll see that it's based on years of CAPEX. There's a loan section which will have the interest paid, a depreciation section for the assets. Very simple. Your balance sheet equally simple. Simply your long-term loans balance, and then the assets side will have the plant, property, equipment, and intangibles. On the cash flow side, right at the end, you can see there's the cash flow, the purchase of the property, plant, and equipment, and the purchase of intangible assets. Then on the loan section, proceeds from the loans itself, and then comes through the repayment of the loans, the capital portion. Of course, this plus your interest paid will equal your installments paid. And the very last balance, other movements, represents when interest is capitalized to the loan and there was not an installment. So it's for non-monthly installment. And then simply all your balances pulled through to all three: income statement, balance sheet, cash flow statement, which is important when you're forecasting and doing your long-term planning, either to arrange funds or to plan for your shareholders or bring in investors. So if you want more detailed, the monthly figures are over here on every single, which details every single month. All that is needed is to bring across this sheet together with your two setup sheets into your forward-looking models and merely copy the formulas across, substituting wherever your date structure is. There you go. You integrate to your three-statement model, making this the ultimate integration model. A quick note on model navigation. You will see a navigation panel on every sheet in the model on the left, and you'll see that they have provision for 7 of the spreadsheet tabs to go towards: 2 dashboards of curves, 2 setup sheets, 2 workings, and 3 statement model. So if you click, for example, on setup loans, it'll take you to the setup loans section, and on there there'll be a bar. You can go to setup fixed assets and so on and so forth. Thanks for joining us, and if you liked the video, please like and subscribe. The companion videos is the Excel loan portfolio tool is in the right-hand screen. The forward-thinking asset and CAPEX forecaster video is now on the right-hand screen. Thank you for joining us again.